Maverick Traders. This is Robb Reinhold, and we are going into monthly options exercision into November, so let's get ready for the week. In this session, we're going to go through last week. What happened last week? We need to know so we can carry it into next week, because we definitely got a technical change in the markets confirmation on Friday. So we're going to go through the current markets. We're going to score all of the markets, score all of the sectors, and then we're going to go into those sectors and find some of the best setups that we can see out there. So let's jump into it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's get ready for the week.
So this week we had a nice consolidation of recent gains. Last week we went up like 7%. And I said, look, we need to have a pause. The big question is, are we going to get a pullback? Are people going to use this opportunity to take profits? Or are people going to rest, consolidate, and then break out higher? And we got our answer. We got the breakout on Friday. I've been telling Maverick traders, we want to get bullish. We think we're going to head higher, but we can't do it until we get confirmation. And guess what? We got the green light on Friday. We heard from a lot of Federal Open Market Committee participants. We heard from Powell, and we heard from several of the governors. And they all are basically singing the same tune, saying that yes, they're on pause, but they're very vigilant and they're not going to let inflation get out of control again. The market seemed to be okay with that message. The bond yields, they stayed low. After hitting 5%, we backed off all the way down to 4.55, back up to 4.65. As you can see here, we have broken below the 50-day moving average, and we're basically low basing here. Next week, we do have the CPI. We expect that the CPI will either cause this bond yield to break higher or to break lower, and that's going to have some effects in the market. Other than the speakers, last week, we just really didn't have anything of any importance. Let's take a look at the trades we shared last week. The first trade we had last week was a bull call spread on Netflix. And you can see Netflix did really, really well. And what I want to do is I want to point out the day that I thought was very important here on Netflix. This day right here. This day was a really nasty day on the stock market, and we didn't really see Netflix go down. That's what we'd love to see. When we're long a position and the market tanks and our position doesn't go down, it tells us that the next time the market is bullish, we're going to get a really nice candle to the upside, which is exactly what we got on Friday. So this trade looks great. This trade has 2 more weeks left on it for me, so this one is bullish, looking nice. Then we had a bearish trade on Teladoc, TDOC. Teladoc was down like 9% for the week. This one expired at a max gain for me. I know I had a 17.18. I know other traders had 16.17 and 16.18 bear call spreads. All of those trades were really profitable, so nice job on Teladoc. Gap Stores was one we were bullish. Last week, we talked about how this was breaking out nicely. You can see for the 5 days here, it basically went down a little bit. I had a diagonal call spread right there at 14. That was my max gain point, but you can see we did not close at that point. However, the stock held in nicely. I'm in a diagonal call spread, so it's telling me that I'm perfectly fine. This is a sideways to slightly up trade, and I've still got some more time on it. And then let's check in on Alamos Gold. There was a nice breakout we had last week, but you can see it did not hold the breakout. Did not hold the breakout. We pulled back here. This one still has 2 more weeks. Nothing to worry about, but we do need this thing to bottom out here and move higher. So overall, some decent trades. Let's take a look at where the market went this week and some of the numbers that came with it. The Dow Jones went up about 0.5%. Dow Jones was not very big this week, but take a look at S&P, up 1.3%, Q's up almost 3%. And take a look at that Russell. That Russell is just underperforming. It's underperformed for a long time. There are not many weeks where the Q's go up 3% and the Russell goes down 3%. That's a 6% difference between those two indices. That's a really big difference. Russell 2000 is extremely weak when compared to the rest of the market. We also saw oil get hit again after losing 5% last week, another 4% this week. Oil is down into the mid 70s. I actually think the energy sector is really ripe for some bearish trades. Gold also rolled over. The US dollar spiked up this week, causing gold to tumble. That's another big loss for gold. The gold miners are definitely feeling this pain in the gold market. Here is the chart that I really want to take a look at. And we saw that we had this base. We had this nice base right here. We came up, this huge rally. Remember, the strongest positions or the strongest markets, they don't pull back, they base. And that's exactly what we got. And we got the confirmation of the breakout on Friday. This is exactly what I was waiting for. I said we want to hold above the 50-day moving average, go sideways, consolidate some of these gains, and then break higher. That's exactly what happened. But remember, last week I said, this is what I think is going to happen, but I can't act until I get the confirmation. So I told you last week, this is what I thought was going to happen. Pretty much that's what happened. Now I finally get the green light to act, saying, okay, it is now okay to be net bullish in your portfolio and net bullish in your trades. Now look, this market could turn around tomorrow and plunge. We have no idea what's going to happen in the future, but we do know of all the times that markets do this, if you went net bullish at these moments, you were going to be right more than you were wrong over time. That's how technicals work, is telling us be net bullish here. Let's move on to the NASDAQ. The NASDAQ was showing relative strength, and you can see it is just absolutely cranking higher here. So we just left this resistance behind, and we blew out on top. The NASDAQ is looking even stronger than the rest of the markets. We come here and take a look at the bonds here. The bonds had this big pullback, and as you can see here, we now are doing a little base here. We came all the way down to 4.5, and now we're just going to hang out in this area. Tuesday is the CPI. If that CPI causes this to go back up above this 4.67, 4.68, I think the market is probably going to feel some pain and give up some of the gains. However, at 4.6, this market is perfectly happy with 4.6% interest rates. Now here's the irony. A couple months ago, it wasn't happy at 4.6, but it's all relative because we hadn't hit 5 yet. When we hit 5, all of a sudden 4.6 is easier to live with, and that's exactly what we're seeing here. Tuesday is going to be a big tell if we can stay in this range, or if we move lower below 4.5, I think this market is really going to rally even stronger than it has going into this. So if we take a look at next week, we have bullish confirmation. The 50-day moving average is the line in the sand. What I mean by that is if we lose all these gains and we go back below the 50-day moving average, then that bullish confirmation is off the table. We've got to go back to neutral. So right now we're getting the green light, but look, we all know how markets work. Sometimes they give us a green light and then we have to slam on the brakes. That's just what happens in trading, but we know that more times than not, the green light is a really good signal for us to get more bullish or, again, more bearish. I think we're heading into some year-end performance chasing. I talked about this last week. I think this is going to be a big deal here. As we've had a choppy market all year, all of a sudden, if things are looking like they're smooth sailing, which right now they kind of are, I think you're going to see money come into this market only for the reason that they have to show good performance by the end of the year. And if the markets rally 5% into the end of the year and these funds aren't invested, they're going to look really silly. So it's going to force them to put money into the market, which is ironic because it makes the markets end up going higher. And of course, I don't need to remind you of the bleak news out there. Lots of bad news out there happening in the world. It's terrible. And yes, whenever something gets a little bit even worse, it is going to weigh on the stock market, but we expect those. But the market is buying dips here, and as long as that continues, we're going to continue to see higher prices. All right, let's take a look at the big news here. The big news is on Tuesday. Tuesday's CPI. CPI forecasts are for 0.3%. And that's the core. And then the headline number, look at that. Forecast of 0.1%. Year-over-year CPI, 3.3%. This is really moving in the way the Fed wants. Let's talk about possible numbers here. Let's say that the CPI comes out as expected. That is really good news for the market. Most of the time when something comes out as expected, it's already baked into the pie. This time, we've just had this big down move over the last 2 months. At expectation, inflation numbers are going to be really good news for the market. They could even be a little hot. Let's say the month-over-month number comes in at 0.2 and the core comes in at 0.3. No one cares. Even if the CPI comes out at 0.3 and the core is at 0.3, it's fine. The core is going to be what people worry about. If that core comes out at 0.4, all of a sudden that's not a great report. If the core comes out at 0.5, that's going to be some trouble for the market. So at expectations or better is going to be really good news for the market. We've got PPI the next day. Same thing, 0.3. And then after that, really nothing of any importance for you to look at on the calendar. So the big question is, do we have a change in the market, a technical change? And the answer is yes. We were at like a plus 0.5 last week. We were like right here saying, hey, we're tilting bullish here, but we're not ready to go yet. We now have a clear +2 here. We can now do some bullish strategies. So the big question is, where is the strength in the market? And to figure that out, what we're going to do is we're going to jump into the sectors and find out where the strength is in the markets.
Have you been trading in the markets for at least 2 years? Are you starting to see some decent progress? Is that progress so small because of your limited account size? Maverick Trading is a prop firm that provides capital to profitable traders. You trade a minimum $25,000 account and keep 70 to 80% of the profits. After 2 consecutive profitable months, you move to a $50,000 account. As you keep progressing, you will be able to trade 6- and 7-figure accounts. To learn more about trading for Maverick Trading, either click on the Apply card in the top left, click Apply at the end screen, or click the link in the description to watch our recruiting video that explains more about Maverick and prop trading. If you like what you see, apply for a position and meet with our recruiters. Are you our next trader?
Let's first take a look at performance last week. And check this out. There is not many times you see 8% difference between the best and the worst sectors. That just doesn't happen. But take a look at the gain in technology. 4.5% in technology. And then we come over here and take a look at the loss in energy. Almost 4% in energy. Really big moves between the two. Energy is definitely going the other way of the market. As you can see here, what else was strong? Well, we had comm services. We're nice and strong. We had industrials, financial, consumer strong. What turned over? I really want to point out utilities and real estate. Because last week, they were the largest gains. The reason they were the largest gains because they had just been absolutely punished when we were up at 5% interest rates, because these are interest rate proxies. The higher interest rates go, the less attractive these stocks get. When we had that big relief in interest rates, these things had monster bounces. They just gave that up. They just gave some of this back. These sectors, they are in the middle of the pack, but lately over the last 2 weeks, they've really been big movers. I want to also point out healthcare. Healthcare was our weakest sector last week, and it underperformed the market. On a week where the stock market goes up and healthcare goes down a percent, that's telling you that it is continuing to stay weak. And of course, materials and energy, weak as well. We'll take a look at all of these stock charts here in the next little minute. In the next few minutes. Let's first start out with the utility sector. So the utility sector, it came all the way up to this area, backed off, and you can see we are now between the 20 and 50-day moving average. So that means that this gets a 0. Between the 20 and 50 is a 0. So that is a little bit of a downgrade from last week. Here we have comm services. Comm services, +2. Last week we were at a +1. This goes to a +2. Yes, we are getting into some overhead resistance here. There's no question, got some overhead resistance, but this is along the sector. I wouldn't worry about that too much. We've got a nice breakout here. High base in a week that came off of the big gains. This one looks really good to the upside. We're at a +2 on comm services. Next up to real estate. Real estate last week was a +1, and you can see it has simply gone back into the area between the 20 and 50. So that gets a 0 on the score. Next up is healthcare. Now, as you can see here, healthcare came up into the 0 range, but by the end of the week, it fell. And remember, the market had a big nasty down day on Thursday. And this thing was even worse than the market. And then the market had a huge up day on Friday. And look at this lousy candle. That's a lousy candle on Friday compared to what the rest of the market did. So that means that we are going to stay bearish here on healthcare at a -2. Coming over here to industrials. Industrials poking its head out a little bit above. Look, this isn't the greatest pattern. That's why we're at a +1, but it's definitely looking to go the right way, poking its head up above the moving averages. Moving on next to the financial sector. Now, the financial sector gave us a really nice high base here. Really nice high base. We see the moving averages starting to turn higher. So that's a signal that this wants to go higher. We're going to give this one +2 here on financials. Here is the consumer sector. Now you can see we are stuck here at some pretty big resistance. Pretty big resistance at this level. We have backed off. We're not breaking out like some of the other sectors. So we really just have to stay with the 0 here on consumer. It's not bad. It's not great. It's just somewhere in the middle. So let's talk about what is great at the moment. Tech. Tech is fantastic. Take a look at this run. It is clearly outperforming everything else. The only thing we don't have yet is a cross of the 20 above the 50. Once that happens, I will gladly go to a +3. But until that happens, I've got to stick here at a +2. Coming here to the material sector. Last week we're at a 0. This week we're at a 0. We're still stuck between the 20-50 moving average, so that's where we are. We're at a 0. And then let's go to the energy sector. It's a -3. It had this bear rally. And just think about the kind of week that the stock market had this week. And then take a look at the week that this had. It's completely different, especially on Friday. I mean, take a look at Friday's candle. Friday was a really big up day in the market, and this is the candle you get. So look, energy has gone from the best sector 6 months ago to now the worst sector. And this is all because oil is heading down into the mid-70s now. If we look at where we were last week, this is where we were last week. We liked utilities, tech, financials, real estate. Well, we got some upgrades this week. Financials got even stronger. Comm services has now joined the group. And on the downside, utilities and real estate went back down to a 0. And take a look at energy and healthcare. Most of the time, we see a lot of these sectors clumping together. And then sometimes we see real divergences. This is one of those times. It's very rare that you have a couple sectors at +2 and a couple sectors at -2 and -3. This does not happen very often. So you can see where this market is. We want to be long tech, long financials, long comm services with our most aggressive plays. We want to be short energy and healthcare with our most aggressive trades. And then everything else, it's not really telling you to really lean one way or the other. Mildly bullish, but other than that, that's where the market stands. So let's go ahead and take a look at some trades. First up, comm services. This is a +2 sector, so we're definitely looking for some bullish stuff in it. Last week we did Netflix, and this week it's Meta. Now look, I use screeners. I didn't just pick Meta. I don't like to trade Meta. I'm not a Facebook fan, but look, it doesn't matter. It doesn't matter what I think about Facebook. I'm not investing in Facebook. I'm not investing in Mark Zuckerberg. I'm making a trade to try to put some money in my pocket. That's all I care about. So whatever the symbol is, it doesn't really matter. So when I take a look at this chart, and then when I take a look at all the other charts in the sector, this one is one of the best. Absolutely one of the best. Now, the one thing we cannot ignore here is we are running into some resistance here. So we expect there to be some resistance at 330. That's just what we expect. How do we make a bullish trade in spite of there being resistance at 330? Well, we can do a few things. We can pull out our diagonal spread, where we can literally go out and buy the December 15th, 320, so over a month away. So time decay will be very, very little on that, and sell this Friday's 330 against it. So that diagonal call spread, if we bounce off of 330 and we don't break above it this week, this diagonal call spread will be the perfect trade. Now look, if Meta breaks out and takes off to 340, you'll still make some money, but you won't make as much money. If you want to be more directional, these are the trades you want to be in. So again, the December 1st, giving it 2 weeks. The December 1st, that's giving it 3 weeks just to clear up above 335. So this just is a very, very easy trade here. We're looking at having it go up to 335. That's really what we're looking for on this spread. If you want to be even more aggressive, December 320 calls. Now this may surprise some of you because I very rarely have calls, just straight calls on here. I do that when we get to +2 and +3. Those are my rules. When the markets get to +2 or +3, I can now start to make some more aggressive trades on the bullish side and the bearish side. Let's jump next into healthcare. Healthcare is a -2 sector, so we want to be looking for shorts in this sector. Here is Moderna. So as you can see here, Moderna, we had this move lower, and we finally got to this bottom off of earnings, a gap down on earnings, but people came in and bought the earnings. But look, after that big gap down, all the excitement of people probably short covering, when people finally got to think about it, what happened? It drifted lower. So this is bearish. However, do we think that this stock is about to plunge down below 62 and go to new lows? Probably not. Why? Because the market is not as weak as it was when this is happening. The market is now more strong than weak. So we want to be very, very cautious on how bearish we get, and we can be a chicken. This is what we call chicken bulls and chicken bears. So we could take a look at doing a diagonal put spread, which is a -1 style trade, or we could take a look at doing just a really wimpy 67-71 bear call spread. And I'm going to show you just how wimpy this is on a chart. So 67 to 71. If I were to draw out, what is that range? Right here. That's the range. Sorry, that is a little too high. Yeah. No, that's right, 67.71. Basically, if it goes up above that, I'll take a max loss. If it goes down below this, I get a max gain. As you can see, this is a very, very controlled, very wimpy trade, not asking for it to do a lot. If it continues to weaken over the next couple of weeks, this is going to be a really nice trade because it's going to end up being max gain at the end. The next sector I haven't made a trade in for a while is financials. Why? Because financials has not been showing up as a very strong sector. Now it's at a +2. So I went and looked, pulled out a screener, said, hey, give me one of the best stocks out there that's having a pullback. And this is what I got, Aflac. So we just made a new swing high. Right here, we had a pullback. And now we've got a reversal and a confirmation. This thing is ready to go. Now, short term, we have to look at this 8250 and say, hey, look, short term, this is probably all the upside has. So if I was looking at making a trade for 1 week, the most I could hope for was 8250 because it's probably going to have some trouble getting through that range. That's why we want to look at some different trades to give us a little bit either more time or give us a different strategy. We could take a look at the diagonal call spread, which basically is set up for it to stop at 8250. 8250 is our max gain price. If it gets up to that point, it's going to be max gain. If you want to be more directional, just give it more time. So we expect there to be some resistance at the 82.50. Just go out to December 1st, 80.85. That's giving you 3 weeks for it to run up to 85, which is really possible within 3 weeks of time. We cannot ignore tech because tech is on absolute fire right now. So we're looking at CrowdStrike. This one I really like, and I found a couple stocks this week. Adobe is another one that I really like. I'm really liking the stocks that already broke the October highs. The market hasn't done that yet, but these stocks have. Look at this. It came up, got up above that point, did not stop at all, and now we're breaking out to the upside. So the stock's at 196. The question is, how aggressive do you want to play it? And this is where in a +2 market, I allow myself to get more aggressive, but I'm not going to be all that aggressive on this one. I need some more bullish trades that are shorter in nature, so I'm looking at this one here, the November 24th, 2 weeks out, 195.200. So basically, I'm looking at playing it from here to here. That is my range. If it goes up above that point, I have a max gain. If it closes below that, I've got a max loss. Pretty simple trade. If you want a little bit more time, you can definitely look at this diagonal call spread. Sell this Friday's 200 against it, and then you've got that December 190 that has a lot of time left in it. If this market really takes off and runs, this could potentially be a really big trade here on CrowdStrike. And then last, I want to go to energy. As I said, I think energy is absolutely shortable here at this point. That being said, I am not going to open up a short here. I'm going to be opening up something a little bit more sideways. This is British Petroleum. And I pulled up a longer term chart just so you can see where we are in the range here. I want to point out, and again, I didn't go too far back because the candles got too small, but there was some serious support here in the 34.50 area. And also, this is a dividend paying stock. And a lot of times when these stocks get to certain levels, they have a hard time going any lower because they've got a big fat dividend. And people step in and buy these just because of the dividend. I feel like that's where we are here on British Petroleum. Here's the thing. I'm not bullish at all on this. I'm just saying I think it's going to stay in this area. I think it's going to stay down here in this range here. So how do I make a trade to profit from it staying in this range? I think you all know the answer to that. We're going to do a little bit of a targeted butterfly here. So looking at 2 weeks away, November 24th, this one is actually going to be slightly bullish. It's going to be slightly bullish in a sector that I do think is a shortable sector. But when I looked out there, everything had already gotten hit pretty hard and I didn't want to chase stuff. So I'm looking at saying, hey, look, I think this stock stays right here. Sorry, let me draw that again. Because it's a 34, 36, 38. So I think it drifts up into the middle of this range. This is a targeted butterfly. I think this stock stays weak, but I do think it bounces off of this bottom here. And I'm giving it 2 weeks until expiration. And my rule on it is a week in, I can take half off if we are close to the middle strike. If there are any trades that you want to share with the rest of the Maverick group, you guys know where to go. Go to the Maverick Trading website, log in, go to the Traders Forum, and we'd love to see the discussions of traders having with other traders, everyone trying to help each other be more profitable. Wrapping this up, I want to just say this once more. I've been talking about a potential bullish move since October 15th. Now, I know you're thinking about that saying, Rob, weren't you quite early? And the answer is yes. And if you remember back, I said, this is the end of the seasonality pattern. I'm no longer looking at being really bearish after October 15th. And then we went ahead and made a new low. And I said, look, yeah, it's not going to happen. But I'm still not looking to get too bearish because we're at the end of seasonality patterns. We had that bounce last week. And I said, look, you can't get overly excited about that until we get confirmation. We got the confirmation. Year-end performance chasing could push this market higher. Now, how much higher? Look, I'm not super bullish here. Maybe 3-4% to the upside. But look, that's a decent market over the next 6 weeks. And then it's the end of the year, and then January will be a whole different ballgame. We typically get bullish activity into the holiday weeks. Again, all the seasonality patterns, everything's telling us, the charts, the seasonality patterns, everything's telling us we could get a year-end move higher. But that being said, I don't think it's going to be a huge move. I just think it's going to be a moderate move higher through the end of the year. That is the Market Roundup. Thanks for joining me, everyone. Have a great weekend. Goodbye, everybody.